Well, welcome to Overhead, a pretty complicated technical chapter. Last time, or at least when we were talking about chapters 7 and 8, I mentioned to you that those were the most complicated accounting systems. That's true, but that doesn't mean there's not other complicated stuff. So this is equally as technically challenging as chapters 7 and 8. It has to do with overhead. And potentially, we could have taught you this before, but it's probably better to introduce it after chapter 8, because now that you've done chapter 5 and 7 and 8, you now know the system as a whole, as a cycle, as a flow. And in chapter 9, we're going to take one of those pieces and make it more real, more difficult, and that is the overhead piece. We have also, during the lectures, I'll be talking about two different ways that we see overhead. And there are two totally different ways. One is our history. The Anglo-Axis way is the way that we'll be using mainly in the chapter, which is the techniques that we're going to learn are primarily focused on in the Anglo-Axis world because they're financial accounting. They're not necessarily financial accounting techniques, but they're a financial accounting mentality. And they do support financial accounting, okay? So they are there largely for financial accounting. But they're mainly a mentality I want to talk about. And that mentality is, and we inherited it from the British, which is the idea, the concept, the belief that actually you can look at a statement or a report and actually understand physical things that are happening. Somehow, in the Anglo-Axis, we all believe that. Well, I don't believe it, but most people trained in typical university courses, they actually believe that, and they believe it by accident. No one ever tells them that, right? It doesn't say in any of the textbooks, if you do this, if you learn financial accounting, you will all of a sudden be able to understand operations. They never say that. What happens is it's sort of an invisible, undescribed belief that is completely pervasive. Part of it is the history of our organizations. We've gone through that. Our history is a completely class-oriented history where the upper class people controlled people like us, and they did it remotely. They would just sit in their manor house or their castle and they would write a memo saying, oh, you serfs and slaves and peons, you do it this way, or you make me this, or you do that. And they didn't really feel that it was necessary or even desirable to come and see what we did, to go to the place that value was created. And that is deeply embedded in the whole approach we have. And that's one of the reasons that we sort of believe in incentives so much. Remember, Dan Pink showed that that's bogus, but everyone believes in it. And partly it's the desire that we really want to be able to run things by remote control. Huge number of examples of the people that were successful not doing that. And just look, every success story is someone that more or less didn't do that. Josiah Wedgwood was a potter. He knew how the pottery worked. He knew how to throw a bowl. Throw is what they call when you're on a wheel. It's called throwing. He knew the craft because he was a craftsman, okay? Then he also knew the business side. So he knew all those steps, and he knew it through personal, subjective experience. And if you look through, the history quote of famous people in organizations or business, they all have the same history. None of them are outsiders. Citroën, Henry Ford, all those people. Durant, a name you don't know, but associated with the early part of General Motors, they knew how things worked in a physical, tangible way, okay? But for the most part, we don't know that, we don't teach it, and that's in your brain. Now what we have is sort of the other side of the story, which you're also learning. So, okay, this is how we do. Whenever you're a famous film director, the way you tell alternate stories is when someone has one side of the story, they say, this is the other side of the story. Notice, on the other side of the screen. You're also learning a different approach to this, which becomes very important when you're talking about overhead, and that is, in the world-class and lean approach, the mentality was different. So this is one of the many ways it was different. What the Japanese did was different on many, many different levels. A lot of people understand part of them, but not all of them. So I'm going to talk about a specific one specifically related to this issue of how do you know what's going on someplace. Okay, remember the other side of this screen, this guy knows by reports and by analysis. Well, this guy doesn't do that. So the Japanese at the philosophical level, and it's not a business technique, it's the way they run their life, is they are totally committed to human, personal, subjective experience before making decisions. In their guts, they don't believe that you can actually do anything sort of smart or sharp if you don't have a physical connection to something. Now, and then it is translated, and they do it in business. Some businesses do it more than the others. Toyota does it a huge amount. But this is also the same approach that they use across all the dimensions of Japanese life. So in a minute, I'll tell you the word that's in the lexicon in English for lean. So if you in your career, and I know you will follow some lean stuff because everybody's doing it. So lean or world class, mainly called Today in North America, they mainly call it lean production, but it's in your book what we call world class. The word is genchi genbutsu. Okay, and what it means is the current translation of that meaning is go to the place or go and see. But it embodies this cultural idea that to have true knowledge, legitimate knowledge, you have to have personal experience, and it's personal, subjective, observational experience. You have to go to that place, talk to the people, you have to smell it, you have to experience the sounds, and only then can you make the right decision. Because then that's when you have complete knowledge. And that's totally different from, the guy on the other side of this screen, which is the concept that you can look at a report and know enough to make a decision. So, in fact, the Japanese tend not to have very accurate accounting systems for decision making, and they don't want them because they don't need them. They make almost all of their decisions based on personal observation, and they go and look at things and they talk to people, and they don't just breeze through. Like if you're at General Motors and the VP of GM comes to visit your factory, that VP is going to cruise through with 10 people following him or her, and they'll breeze through and maybe not even stop. They'll just walk through and look and stuff. They'll be in and out of the whole factory like in an hour, But if a Toyota executive comes, if the president of Toyota comes to a Toyota factory, he's going to be there all day, and he will stop at station after station, and he'll say, how are you doing? How is this working? How did that car go? Is it better? Last year we made a change. Was that an improvement? It'll be this barrage of questions. Why? Why are you doing this? Is it better? Or is it good to do it like this? And this would be from the president of Toyota. He will do the same thing because this is the way they approach life. Okay? So notice that what we're teaching you in Chapter 9 is more or less an Anglo-Axis method to try and simulate in a document the flows of action in overhead. Okay? Now the Japanese also do this too. They just tend not to look at it. They use it to support the financial statements, and then for analysis purposes they just don't study it because they're actually getting first-hand information. We, on the other hand, have a very strong tendency to try and use this system to actually make the decisions and get understanding of what's happening, which basically doesn't work. That's why everyone in outside of Japan is basically changing to do stuff the Japanese way. So here we go. We're going to take a look at the ideas behind overhead analysis and what we're doing in Chapter 9. So the first two things we need to take a look at are the idea that we need to have two different types of departments. From now on, the rest of your life, most of your accounting is going to be departmentally focused. Okay? When I say the rest of your life, I mean if you're in a medium-sized or larger organization, all of a sudden the main reporting entity that you deal with is departments. Then to make financial statements, you consolidate them up, but it's the departments are the primary coding element in the accounting system. And you saw that in Chapter 7 and 8 when we moved over to departments. We are going to start dividing departments conceptually into two: production departments or service departments. Now notice that's already a little bit of a failure point there because that's, saying that all departments fall into two categories, yeah, that doesn't work already. So notice that like all accounting systems, we try and do a good job, but by the nature of trying to get people's lives on paper, a lot of corners are cut that reduce the effectiveness. And one is having only two categories here and recognizing them. Certainly though, for Chapter 9 and for learning how to do this, it's a good place to start. Now, we're not going to, in Chapter 9, we don't use the word overhead very much as a technical word. Generically, it's what we're talking about, but we're starting to use the word service cost and service departments. So most of what we have talked about before as overhead is a support service, supporting a production department. And so we're going to use the idea of service costs and service departments as our technical vocabulary word. And we're also going to be going down the following path, which is in Chapter 9, we're going to be looking at a part of the step of the flow of cost analysis to try and figure out what overhead costs are, because we've never told you before. Up till now, as far as I know, I'm pretty confident of this. It depends on which exact class you may have taken in first year or in high school. But we never let you actually look at this secret way that we look at overhead. We always just gave you the answer. Always in this class, and as far as I know in management accounting, we just said, oh, overhead for the year was 60,000 or 60 million or whatever it was. You were just handed that number, and you had to do something with that number. Like, for instance, you had to compute a POR. But we never had you say, where did that number come from? Okay, that's what we're doing here. So we have a bunch of costs, which we would say, overhead, but we now want to be more accurate because in real life, companies make many different things and produce many different services. Very many. Well, two different products can have really different costs if they use a very different amount of support service. And that's the most likely place for a cost difference to come in. You know what? You're not going to find too much difference in cost at the production level. Direct material and direct labor, for most products, it's not too much difference. I mean, if you were, like, to make an E-Series or an S Mercedes-Benz car, if you didn't have to do the R&D and do the design, but if you could they handed you the design and you could just source the materials and made it, the cost of the direct materials and direct labor to make a Mercedes, the big expensive, S-Series, it's about $5,000. Right? That is their marginal cost to make one of those cars. And it's not that much different from the marginal cost of a Lexus or any of the other cars. Marginal cost of making like a Toyota Corolla, I don't know, maybe like $3,000. Notice it's not too much difference there. Now, what is hugely different is actually the overhead. The design cost to design that Mercedes is titanic. Okay? Well, if you're Mercedes and you're making both A-Series, which they don't actually sell in North America, but the Mercedes makes A, B, C, whatever, all different series cars. Well, the A-Series is a pretty small car, and it's sold for a relatively small amount of money. It's still a luxury car, still a Mercedes, but it's not a big dollar car. And it actually is pretty small. Like, it's the size, it's just a tad bigger than a smart car, if you know what a smart car is. Well, the design cost of that is much lower than the design cost of the big luxury cars. So most of the cost difference for most products is actually not in the production department, and it's not in the direct material and direct labor. It's actually in the service cost, and that includes some of the allocated design cost. So job number one, and we actually don't do this, but we talk about it, is we need to take this giant mess of overhead costs and we need to assign it to service departments. This is called tracing. Okay. So tracing means we know exactly where the cost came from. We paid that money because they needed that piece of equipment in that department, or that person works in that department. So this is the most accurate cost assignment method, is tracing, assuming you do it right. We talk about this. You need to know the theory. There will be questions about it. But I don't know of any books that actually have you do this. This is a giant mess, but it means that every transaction that you see has to be assigned to a service department. So in one sense, it's sort of intellectually simple, but it's a titanic volume of transactions. And it's called tracing. The next thing that happens, and we are going to use a particular word here, allocate. So from now on, this is a technical word. You can only use it for this transfer. Allocation in this class and in accounting is no longer a generic term. The cost allocation is the transfer of some cost from a service department to a production department. So it's a department to department transfer. A POR is not an allocation. Okay. So we take the big mess of costs, like this giant multi-billion, zillion-dollar pool, and we trace them to all the departments that spent that money, and then we'll have an account for each department. So even though this is one box, you know, if you have 20 departments, it's actually 20 boxes, right? But I don't, you know, I'm bad enough at making graphs that make sense, or you know, diagrams that make sense with one department. Imagine if I had 20 departments here. Then we take the service department cost, and using what we're doing in Chapter 9, an allocation, we transfer the service department cost to the production departments. This is not a POR. It's an allocation of a lump sum cost. This is what we're doing in Chapter 9. This is the entire purpose of Chapter 9. You've never done it before. What you have done before is the next step is to take the production department costs, and this is production department service cost, right? So this, in this box, we're not talking about the variable costs, the direct labor and direct material. We're just talking about the overhead costs, or what we called overhead costs. We're now calling them production, mainly calling them service department costs. We're going to transfer that to the product itself. And this is called application. Okay? We've never really gotten that technical with you in the past, but you will notice that that's where we talk about over and under applied overhead. It's because the overhead is applied. Anytime you're using a POR, you are applying the overhead. So this is called the application process, and this is where we use PORs. Okay? And so you have done this a lot since your first accounting course. You've done a little bit of this. Then in this term, we sort of upped the ante a little bit and dealt with some more complex ways to do this. In particular, in this class, in chapters 5 and chapter 7, you were doing alternate methods of dealing with PORs, where you had both total overhead PORs. This would be a single plant-wide rate, single total overhead rate. And you also had, I should have used a different symbol. That slash symbol usually means R or to most people. What I should have said is this is a plus symbol. VOH plus FOH. Maybe I'll do that and pretend I was smart enough to do a plus symbol, which would be variable overhead POR, and FOH POR is fixed overhead POR. So you either be doing the variable and fixed, which is the better, more sophisticated way, or especially as a learning beginning problem, or some of the problems they make part of it easier, it would be doing a single overhead application rate, which we would call a POR. That would be a TOH POR, VOH POR, FOH POR. So this is the process, and Chapter 9 is pretty much the first time you've actually dealt with this level of the process. And it can be fairly it's pretty complicated depending on how it's set up and what you do. There are three main techniques that we'll use. So the techniques are starting from the simplest and least accurate to the most complex and most accurate are the direct method, step method, and reciprocal methods. Okay? Your book introduces the reciprocal method and talks about linear programming. You do not need to study that. I'm going to show you how to do the reciprocal method through matrix inversion in Excel, which is much easier and easier to set up and easier to implement than linear programming. If you're going to do linear programming, you can definitely do that in Excel, but it's like the next step more difficult. If you're a math-oriented person, I urge you to take a look at it. It's a great method for many things, not just in Chapter 9. It's sort of a life skill if that's your orientation. If it's not your orientation, don't do it in Chapter 9. So for the reciprocal method, we're going to be doing Excel matrix. On the posted solutions, you have the solution posted to, I think the problem I'm going to do 9.43, but I will also walk you through it. What you can ignore for this class, it is up to you, is the linear programming method. It is more sophisticated. It's definitely a more sophisticated method. If we use the matrix inversion method, the only thing you really get out of it is the overhead accounting. But if you were trying to get an understanding of the factory and make economic and business decisions, on the other hand, you would want to use this. But you know, we have a lot. There's a lot in that chapter, a little bit too much, and so I'm going to, at least for this chapter, focus on what we need to do the overhead reporting that we need to do, allocation that we need to do. So I'll be doing this in class. And I'll actually take one problem and do all three of these so that you can compare the methods and the results. Least accurate, okay, but easiest to understand. This is the middle level, although it's actually above a middle level answer. If you set it up properly, this answer can be pretty close to as accurate as this. So it'll never be this accurate. So step method will never be as accurate as the reciprocal method or linear programming method, but it can be pretty darn close. And it has an advantage that almost everybody can understand this method. The only disadvantage of the reciprocal method is if you have somebody that's not good with numbers, it's impossible to explain to them what happened, right? It absolutely is impossible. You have to be moderately well tuned up in math to understand how linear programming really works. Now you can get an answer out of the system without understanding it, okay? Which some of you will be in that position, okay? That's okay. But if you had to explain why or how a number came, and you'd be stuck. And remember, the most important part of these numbers is that the people using them believe in them and they have confidence. That's more important than arithmetic accuracy. And that's the only problem. The reciprocal method, you'll see when I demo it, is actually easier, and once you know how to do it, it's actually easier and faster than these two methods. And you have a spreadsheet that is like the spreadsheet you just did, meaning you just change the raw data, everything flushes through. That's different from Excel and regression analysis, for instance. Like if you have a regression analysis that you do 1 year in Excel, and then the next year you need to do it again. Let's say instead of using the high-low method, you were using regression. Next year you have to actually re-specify the regression model and run it again. When you change the data, it does not automatically update, right? But this solution does automatically update the reciprocal method using the matrix inversion in Excel. And so actually you can create a spreadsheet that anyone in the future can use, and poof, all they have to do is put in the raw data, and thing happens not by magic, but by math. And so we'll be working on that. So what we're doing though, we need to think about this. When we get to chapter 10 and we're looking at ABC, we're going to be working with the same process here. So activity-based costing is doing the same things, but we have a slightly different answer in that we're going to put different things in these boxes and have a different thinking process to determine what we do, but we're still doing this. So this model is important to have in your head. Also, it's really important if you can do this, to have this model in your head, because what do you see in real life? Real life is so complicated that you're only seeing like one little tiny piece at a time. And when you're looking at those pieces, it's hard to figure out, like, where is this coming from and why do I care? And right? And now what happens is that real life is so complicated that this box here will be so big that it might be, like 6,000 lines on a spreadsheet, and you can't see it all at once. So here in university is a good chance to see how the model itself works. Hopefully you can retain that model, and then when you're in practice, and you're doing the details, you'll say, oh yeah, I'm doing this because it's related to this part of the process. I've mentioned in class two other things that we don't study. they're just sort of not in our history. We should be studying probably. But we only have two SJVK. Well, I'm talking, I can't write. It's SJVK. There are definitely things, like if you ask me, I would say we should have a third and maybe a fourth cost accounting class, and then we could get into some of these things. So these are what the Europeans, especially the Germans and the Swedes, do, where we would do the standard costing that we taught you in chapter 7 and 8. They're doing this, which at a quick look at the surface looks more or less the same, but actually is quite different in terms of how accurate it is. Most of the difference in their accuracy here for these two systems actually comes here at this step. It's not at this step. At this step, they don't add a lot of accuracy. It's actually at this step that both of these systems add the accuracy. This is the German Grenzplanskostenrechnung, and this is some very long Swedish word that I used to be able to say, but I can't say it anymore. And they basically come from the same place, meaning marginal cost economics, but they were parallel developments. So they are not exactly the same, but the underlying thought process and theory that they're using is the same, and they've developed very similarly on slightly different paths. But what they do, because of marginal cost economics, is they really focus on the definition and use of what a department is. And that means that they're much more accurate here at this step than we are, even though if you're not very experienced and you see what they do, it looks like they're doing the same thing. But actually, they have much more of a focus on what this means than we do. And that means that they have more service departments. So if you had a factory in Canada, that if you and I were doing it, or some Canadian accountant was doing it, that would have maybe 5 or 10 service departments, the Germans or the Swedes, if they did the study at that same factory, they'd probably have 50 to 100 service departments, because they're going to get these molecular little departments and they will isolate them and do all the computations. So it turns out to have a lot more stuff in it, but the stuff is based on theory and based on logic that makes sense. So these other methods then are probably what we would be doing, and I can promise you, if we had that third cost accounting class, they would be what we would teach. Why don't we teach them now? Canadian CPAs actually don't even know that this exists. Their management accounting knowledge is so poor and impoverished that they have not actually upped the game here. And these are pretty old techniques. These are like 30 or 40 years old. But Canadian financial accounting mentality is still stuck for cost accounting purposes, more or less stuck in the 1950s. So because part of what I'm trying to do is improve your career, I do a lot of stuff, but also my minimum is I do what you need for the CPA exam, because to have a career, you got to get through that CPA exam. Or even if you don't take the CPA exam, you have to establish your credibility at the base knowledge of that type of stuff. Then hopefully I'm doing some other stuff that will get you beyond that also at the same time. But the reason we don't cover this in this class is it's not on the CPA exam, and I don't think it may not ever be on the CPA exam. But this would be what you can learn it on your own too. So there we have. That's the intro piece to overhead analysis. You can see that we're following a bunch of steps. We're introducing some new vocabulary with specific meanings: allocate, trace, allocate, and application. The POR concept only comes between production departments and the products. We don't use PORs between service departments and production departments. It's lump sum allocations with 3 basic techniques. And also the mentality that uses this is that Anglo-Axis mentality of management by remote control. Management without personal and subjective experience. I've mentioned that before too. In our culture, we really privilege the concept of being objective and objective experience. That's, you don't have to do that. That subjective experience is human and it is good. And if you deny it, you can get yourself in trouble, because often the best decision is made based on subjective judgment and assessment of things that we don't have objective measures on. So this is one area. This system that we're teaching you in Chapter 9 is primarily to support that objective financial accounting view of how we would understand costs, okay? Rather than the Genchi Genbutsu, personal experience and subjective assessment method, where they would not really spend much time, looking at this stuff. Okay, so we'll see you at the next lecture, and this is the end of the introduction. See you around.